Welcome to the debate. Today, we're looking at one of the more significant investment stories in Indian Agritech this year, Arya.ai's massive Series D funding round. They successfully raised roughly, $80.58 million from GEF Capital Partners.
Yeah, and that dollar figure, while it's substantial, it really isn't the whole story here. The context is that Arya.ai is trying to tackle this enormous structural problem. You have 60% of India's workforce in agriculture, and yet over half of those farming households are completely shut out from formal credit.
Exactly.
So this new capital is aimed at two huge, really complex goals: reducing post-harvest losses and, maybe more importantly, building resilience against climate change.
Precisely. And that brings us right to our central question for today. Is Arya.ag's chosen strategy, this, deeply integrated end-to-end value chain that combines storage, finance, commerce, and data, is that the most effective path to genuinely empower India's smallholder farmers? Or on the other hand, does this very comprehensive, centralized approach, despite its obvious commercial wins, does it ultimately introduce new systemic risks and maybe even inadvertently limit the true autonomy for the very farmers it's supposed to be helping?
Well, I'm going to argue that this integrated model isn't just successful, but that it's a necessary, proven foundation for sustainable change. And it's validated by its, frankly, undeniable profitability and its scale. And I'll be arguing that while its commercial success is critical, its high degree of integration might be creating a kind of reliance deficit, one that limits the nuanced autonomy needed for long-term resilience, especially when you start talking about complex local issues like climate adaptation.
Well, for me, the evidence just confirms that integration is the key mechanism you need to solve India's endemic market gaps. And look, this isn't just the theory, right? It's been proven by the results. Arya.ag is reportedly India's only profitable agritech platform. Their net revenue is growing fast, and crucially, profits rose 39% in the last half, hitting 31.5 crore rupees. I mean, that profitability is the proof of sustainability we need. They bridge this massive trust deficit by offering transparent storage across their 12,000 warehouses, aggregating $3 billion of grain annually, and then they link that directly to instant finance. With over $1.5 billion in loans dispersed, they give farmers access to capital that's actually tied to their stored crop. And that is the power that lets them decide when and to whom to sell. That's a fundamental gain in autonomy where formal options they didn't exist before.
I do see why you emphasize that financial stability, but I think we have to be careful not to conflate, an optimized supply chain with guaranteed long-term farmer empowerment. That claim of enabling freedom of choice it's a bit difficult to accept when one single highly integrated entity is providing the storage, the instantaneous financing, and the market linkage. Reliance on this whole suite of services, even if it's affordable, creates a potential for dependence and really high switching costs for that smallholder farmer. And that could limit fair access in the long run. On top of that, building genuine resilience against climate change, that requires hyper-localized, granular data and adaptation strategies. So while Arya.ag covers 60% of Indian districts, its solutions are brilliant at solving efficiency problems, like reducing post-harvest losses. But I think they might struggle to deliver the really specific, sustainable, and nuanced climate-smart practices that you need at the farm gate scale across such a massive area.
But the CEO, Prasanna Rao, he explicitly stated the goal is profitably building equitable agri-value chains. That 39% rise in profits validates that these efficiency gains do benefit all stakeholders. It is this profitability that becomes the reinvestment engine, allowing them to reach more farmers and to develop new, data-driven products that reward sustainable practices. Profitability ensures the longevity of the whole thing.
Right. But I'm sorry, I just have a hard time buying that the profitability of the platform directly equates to the maximum possible benefit for the farmer. The 31.5 crore profit figure, it shows brilliant execution, great optimization of their networks. But the debate is whether the success is fundamentally optimizing commerce or truly maximizing farmer income. And you have to wonder if it's coming at the expense of potential market competition that this kind of centralization might suppress. I mean, if all the essential services, the warehouse, the loan officer, the marketplace, are all centralized, how does the farmer really achieve that maximum price discovery that, robust external market forces should provide?
Okay, but that focus on competition, it leads right into the autonomy issue. They claim to help farmers decide when and to whom to sell their produce. But by bundling instant finance, storage, and market access, how's the platform eliminating that pre-existing trust deficit without creating what I'd call a reliance deficit? Have they really thought about the potential for vendor lock-in? That's an interesting point about lock-in, and I would concede that it is a risk that needs, continuous monitoring. I would frame the integration differently, though. I'd say it is a structural necessity that comes about precisely because of that market deficit. We're talking about a starting point where over 50% of farming households had zero formal options, none. So by managing the visibility and control across the value chain, Arya.ag isn't stifling competition. It is creating the foundational ability for these farmers to access capital, $1.5 billion in loans tied to their assets. They can now afford to wait for better prices rather than selling immediately out of desperation. Moving from no options to one high-functioning, affordable, and trustworthy option is a huge net gain in power.
But what about the climate resilience piece?
Well, the new capital is explicitly intended to boost those efforts to build resilience among farmers against climate uncertainties through better tech and promoting climate-smart practices. Their scale spanning 60% of Indian districts is the very mechanism that allows them to gather the massive amounts of data required to develop and then disseminate these solutions efficiently. The investment is targeted at developing products that specifically reward sustainable practices at the farm gate.
I'm just not convinced that a massive commercial scale is the right tool for that specific challenge. A commercial platform's core competence is, usually, logistical excellence and finance. Aggregating $3 billion worth of grain is a logistical masterclass, no doubt. But while reducing post-harvest loss is crucial and it's achievable with tech, that is a fundamentally different problem from the complex ecological engineering that you need for widespread climate resilience. We have to question if this massive centralized framework can really deliver that nuanced farm-specific advice. Things like soil health, specific water management strategies, or if the commercial imperative will always prioritize solutions that just optimize the platform's overall logistics.
In the end, the evidence of profitability in scale demonstrates that the integrated model is a necessary, sustainable, and powerful mechanism. It provides essential access to information, finance, and markets that were previously unavailable. It directly solves core inefficiencies in the agricultural system.
I just come at it from a different way. The integrated nature of the platform is successful. And yes, it's undeniably necessary to bridge that immediate credit gap. But it introduces a trade-off. We have to continuously scrutinize whether this massive, profitable growth really translates into genuine autonomous power for the farmer, or if it risks just optimizing a highly efficient, centralized value chain that limits their independent market power. It's complex, and I think you need multiple perspectives to see the potential long-term risks alongside the undeniable short-term benefits.
Right. And I think ultimately, this discussion shows that this kind of agro-tech innovation is critical. But the challenge remains, how do we balance the incredible need for stability and efficiency that these large platforms provide against the critical mandate of ensuring true, equitable empowerment for every single smallholder farmer?